Just
And
what he just
it's the AI stuff is just kind of useless so far, but you can see the future from here. As I put
yeah.
it, I mean, it's will get much better. This for sure should replace your GPS, your kind of everything that you use your
Yeah,
phone for now.
I got a pair too, and I have to have prescription. I just don't use them that much. All right, let's get some activity going here, and then we'll get started. Let's see. There we go. Get a few people paying attention. If we can. It'd be nice. You guys see Trump making the rounds this morning on CNBC? What the hell was that all about?
No, what did he do this time? I didn't see that.
Oh
So.
my God! It was. I mean, like or love Trump. You got to appreciate him for showing up. But man, that was a little cringeworthy.
It's all just so weird.
Yeah, exactly.
Are you even firing the
The simulation.
stats
We're in a
person?
simulation.
Even firing the stats person would have been fine if you said, "Hey, listen, this is the largest. These are the two largest revisions we've had since the 1960s. I'm not confident in the data. The data is not good, but we should never get rid of someone because of bad data. But I'm concerned, so you're fired." People would be okay with that. But it's,
Yeah.
hey, I don't like the data. That's a that's a problem.
It is a little odd that those revisions were not so. I mean, look, I get it. The data's the data, but come on.
Yeah, and that's why I said I think he has a good argument.
Doesn't pass the smell test.
Yeah.
It's the lack of shame with the timing
Exactly.
of it, the no justification, the as with everything with him, it's just holy shit, I can't believe he's that brazen about it.
Exactly.
Right? Because I mean, the number's garbage. Everyone knows the number's garbage. That's pretty much. It's fair to say that's openly discussed on Wall Street and has been for years that these numbers are insane, and when you revise them so much, makes it doubly insane. So, to your point, Steve, yeah, it's entirely justified if you want to try to justify it. But if you're just going to go mad king and say, "Screw it," these numbers are terrible. She's gone.
Yeah.
You guys are in
Get outta
California.
here.
You guys are in California. Does this redistricting thing happen or not happen? Because I read that Schwarzenegger is going to get into the mix and start arguing against it. I don't know if you're following that. Okay.
I don't pay any attention to this state is so blue it just doesn't matter.
Yeah, to be a
Redistrict
Californian is
away.
to just kind of give up on it. That's your entire political life decision making is just who you talk to about what at cocktail parties, just because it's not worth the vitriol that you get from either side.
Exactly. Exactly right. All right, on that cheery note, let's get this show on the road. Welcome to Wall Street Beats, everyone. Good morning. Today is August 5th, 2025. I am joined by our retail pro, Jeff Macke, and our healthcare pro, David Maris. And I have no idea what we're going to talk about today, but I see a lot of Halloween shit in Home Depot already, Jeff.
Yeah,
I
right.
see everybody's crazy about Sydney Sweeney, and the great ads are people are going nuts over them. The crazies,
I love this
especially, are
time of
going
year
nuts over
because,
'em.
man, what if the tariffs were just an excuse to extend the holiday shopping season by like 3 months? It's entirely possible. I
Right, all
went
that
I went into
inventory they
Target
stocked
over
up
the
on, they
weekend.
got to get it out of there.
I went into Target over the weekend and they're selling Halloween shirts. Now, I want to believe in Target, as you guys know. I talk about it way too much, but I went in looking for beach towels, and Target is selling me jack-o'-lantern t-shirts, bright orange shirts. And it's that stuff clearly is on display simply because of the pull forward, which was a theory right up until later that day, where all of a sudden Skelly, the 12-foot skeleton, is available for purchase at Home Depot. Huh, I thought. The first Monday of August seems like it's
Right,
kind of early to be
a
selling
little early.
October. And I looked into it, and this is a full 60 days before a Home Depot came out with this stuff last year. So, it's they've sacrificed kind of all the benefit you get from having a hot product. And Home Depot, by the way, absolutely crushes in terms of those kind of yard displays. It's just this area that they've decided to dominate, and damn it if they don't. I went there for Christmas last year, huge fan of that kind of stuff. If I tried to put up a 12-foot skeleton, my wife would never come home again. It's just, it's kind of bonkers, but that's what we're seeing. And that's what you had with the tariff pauses. Everybody pulled their merchandise forward. If you're seeing it at Home Depot, who has a lot of clout, who again they dominate this market. There's not a ton of factories out there that are making these 12-foot displays for just everybody.
Yep.
Target has some action, but not really. But you're going to see that over and over again, where they pull forward merchandise to bring it full circle with the Sydney Sweeney stuff. I mean, it's just because it seems like, well, I love it when the retail's in the headlines, but they are not a great retailer. I bought them the second I saw the ad, before it became creepy, before it became a political statement, just because it's a really good ad on just the artistic surface of it. I liked the nod to the Brooke Shields ads. I liked the way they shot it on film and not video. It just was a great looking ad. And I mostly like the idea that she's not really a jeans girl, and she looked nice in the jeans. That's the
Yeah.
idea of the product, is I could look nice in those jeans.
Exactly.
You're supposed to think to yourself, not I want to wear these as a political statement because I like arguing with strangers. That's less of a
Exactly.
good way to kind of move product. But they're also a chain that has real supply chain issues historically, and so now they're faced with something where they've kind of outkicked their coverage in terms of the demand for this stuff, at least at the initial stages, and it's going to be really hard to replenish because they're going to be bringing these jeans in from overseas. How much is that going to cost? Well, if you're American Eagle and you've been waiting decades to kind of get on America's radar for just about anything, again, it's not a great retailer. I talked to a young lady who just has done a lot of work with me over the years, and she came up with just a laundry list of things they're doing wrong right now. The area division's a disaster. Their size runs aren't great, but they need product. And a lot of this Sydney
Yep.
Sweeney stuff isn't even going to be, wasn't even supposed to be in stores until August in the first place. It's probably going to be delayed. But the real problem is it's called chasing goods. And you want to kind of have your base holiday in stock, and then you want to be able to add to the stuff that's selling well and selling, its hot items. The price on your hot items goes way up, way up. It costs you more to chase product in the first place, just because the factories kind of have the advantage there. But now with the tariff situation, American Eagle doesn't have the deepest pockets in the world. It'll be interesting to see if they can stay in stock with
Is that product
if
any
they do
good,
take
Jeff?
off.
I've never owned a pair of American Eagle jeans.
They're the
Frankly, I don't
fourth
know anybody
largest
who
seller of
does.
denim in America. They're behind only the Levi's, the Gap, and Lee. And
Huh.
then
Okay.
American
So they know
Eagle
what they're
comes
doing.
in. What's that?
I said,
I
so
mean,
they know what they're doing?
they're it's what they do. It's if you're American Eagle, you're 45% denim. If denim is selling well, and I think denim is generally selling well. We saw terrific numbers out of Levi,
Yep.
which is not a terrific number type of organization. Another group that, denim comes and goes as a style. When your grandparents tell you never to throw out your old clothes because they'll be back in style again someday, they're speaking specifically about denim. It's, jeans, we give up on jeans all the time, but they were cool on Fonzie. They're cool on Sydney Sweeney. They're just, it's denim sometimes works, and we want to wear that as Americans. But, is American Eagle going to be able to capture the moment? I'm not positive, but it's for them to get out of this slump. They've recorded quarter after quarter of declining same store sales. But at the end of the day, if you're half denim and not a very good chain, and denim's selling better than expected, it cures a lot of what ails you. As my
Yeah.
shot put coach used to
But
say, it's being
given
strong,
this
it
move in
hides a lot
this,
of flaws. What's
yeah,
that?
I was gonna say, given this move in the stock, it would probably be hard to continue owning it after this giant move.
For sure. I mean, it's now they actually have to move some product. But again, if they
Exactly.
can, it's a big if. What it does largely is it obviates kind of the performance over last quarter. And so that's not going to be the conference call conversation. And you probably don't want that to be the conference call conversation if you're American Eagle. We've got very much a market of retail have and have nots, and they are
Yep.
decidedly in the not category. And so they'll move right past that and immediately just come into, whether or not the early returns that all are happening kind of post quarterly close for them are strong. If this demand strategy is working, because now you got everyone's attention. Can you move the product? Are you in stock on what people
Yep.
want on the good stuff? Can you move denim? And if American Eagle can move more denim than expected, that solves a lot of problems. That says good things about Levi, which I've traded into their earnings. Says good things about Gap, which again is selling even more denim than American Eagle. It's a basic item that has a little bit of a fashion kicker, and when those are kind of trending, you can make a lot of money in the stocks and then get out of Dodge. All these are rentals. It's that
Yep.
corner of the mall is decidedly the rental corner. You don't fall in love with American Eagle, you trade it. And if you look at a long-term 20-year chart, this company was trading about these levels in the 90s for the first time. And it's been as high as 50, 60, and just come back down to 10 over and over again, which was initially what got me interested in the stock. Is it's either going to get folded in half or bounce off 10 for the umpteenth time in the last 2 decades. And I kind of feel like it's the latter. I don't think they're falling apart. I just think they're not great.
Okay. What are you hearing? I'm hearing a lot of narrative about the consumers starting to fade here and we're losing purchasing power, and that's gonna start leading this giant stock market rally south again.
Yeah, people love that, man. It's you listen to
They've been
Amazon,
talking
and
about it for 2 years. I know.
nobody moves more product than Amazon, right? I mean, it's I think we can all agree it's that Amazon has a pretty good touch on the consumer, so much so that the retail is really an afterthought. So much so that they
Right.
reported about the best quarter I've seen out of them on the retail side, and not relative to others, because the other retailers haven't reported relative to themselves. They had double-digit growth in third-party sales, in Amazon sales, in their stores, their actual physical stores. Whole Foods doing good numbers. Now, Steve, you've been to Whole Foods. We're California guys. If Whole Foods is doing well, is the consumer really feeling bereft of cash? Because that's not the
Yeah.
cheapest place to go buy your club soda. That's not
No.
that's not. We've got a lot of Krogers around here. We've got a lot of Safeways up there. There's other places to go. And Amazon, again, retail just kind of keeps the lights on for them. It gives them that enormous cash flow, but they make most of their money in Prime, just like Costco makes their money from their memberships. It from a just are they retailing well perspective, that quarter was unbelievable from Amazon. And
Yep.
when they say, it's and Jassy was really upfront. He said, I get it. It's not, I'm not completely oblivious to the idea the consumer should slow down. They could slow down. Prices could be going up. We're not really seeing it yet. And that was as of last Thursday. So, maybe the consumer died since then. But again, is it great out there? No, of course not. You'd have
Yeah,
to
in
be crazy to
California, I'm
think it is.
seeing a lot less traffic in Starbucks and Chipotle and places like that. But
Well,
Amazon, you're right. It's just
two chains that have their
different
own
problem.
problems, right? I mean,
Yeah.
it's with the particularly Chipotle. That was a particularly uninspired little effort that they just turned in there, and
Oh,
they
terrible.
spent a lot of time complaining not about the consumer economic condition, although they did mention that, just because you can't be a bad consumer company and not mention the horrible storm cloud that forms over your chain. But also they complained that they're not getting proper credit for what a value Chipotle is. If you're going to argue with what your customer says about how you're pricing, maybe just make smaller burritos, guys. Maybe
Yeah.
come down a little bit from the
And
$15, 18
charge
pound.
exactly. They don't charge
You
20
know,
bucks for it.
yeah, just don't complain about your customers. That's the takeaway
Yeah.
today.
Rule number
But
one.
we've got Disney this week. We've got Peloton coming in, so we've got the canary in the coal mine, and we have an absolute juggernaut of consumers all over the world. So we're going to start getting a pretty good look, and Walmart coming in a couple weeks. So we'll have better looks at consumer and what they're actually doing versus the hypotheticals. But
Yep.
yeah, it's
Amazon.
really hard. It's hard to kind of dismiss one side of government data as pure garbage and then come up with all this hypothesizing over these bits and pieces of what we get over what consumer says to pollsters versus how they're actually behaving. how they're behaving is they're shopping. We're Americans.
All right. Maris, when's the last time you had a Chipotle burrito?
A while ago. A while ago.
Yeah, same.
Possibly. I mean, several years. So I just the meat kind of always seemed suspect to me, but
But
that's about it.
you got a fitness thing going ever since you joined that
Yeah,
Lifetime Fitness. Bought the stock.
join the Lifetime Fitness. Now I'm like powerlifting. So there you go. That's change your world to join Lifetime Fitness. They reported yesterday. Stocks up a little bit under, still under 30. It was a good number. They, they did what they needed to do. The revenue was up 14%. Free cash flow was 112 million, which is good because they kind of turned positive a year ago. They opened some new centers. The metric that I liked the most though was that and let me just find the exact number because their average revenue per consumer, like, so what members spend, was up 12%. So $888 a month. Are you hearing an echo?
Right. Yeah, I thought it was me, so I muted, but
all right.
I think it's you, whatever you're doing.
I'm saying things twice.
Getting it twice.
So they did it. I mean, it was a good, solid quarter. It wasn't amazing. I mean, they would probably say, "Oh no, look at you! Understand we're doing so many things all at once. It is amazing." I'd say it was good. Adjusted EBITDA was up 22%. So it's just a solid, nice, nice quarter from them. So I'm going to hold what I own there. It's a decent sized position, and they'll have to grow into it a little bit because it's a little expensive. Hims. Speaking of healthcare,
what are the David at the Lifetime Fitness? How did their rates compare to the other gyms? I mean, is this a discretionary item that goes out the window first?
Yeah, well, I don't think
it seemed to me like it's probably a premium priced.
I take back the part of that because first they make it very easy to put your membership on hold. So you can it's month to month membership. You're not doing a year membership, and you can just put it on hold. Right now they have. They actually give that like 800,000 people on hold or something like that. They have a large number of people on hold, hundreds of thousands of people on hold, where you can just pause it. But to disagree, it's part of someone's lifestyle. So, and they gear toward affluent folks. So I think you would give up this before a Botox, but you wouldn't give up this before an extra lunch or two. But their fees are completely separate from, so it's like $450, $500 depending on the center a month versus a Planet Fitness, which I think is now up to $15 a month or something like that. So it's like night and day. There, one you get 3 pools, the other you get a bucket of water to shower in or something. I'm only joking, Planet Fitness. I'm only joking. I like Planet Fitness too. I don't own the stock.
Is it really $450 a month?
Yeah, for the first person. So people get a bargain out of it is it's $450. Then it's maybe $100 for the next person in your family, and then it's $50 every additional member. So if you have a family of 4, where it really pays off, if you have young kids, they have a kids program where you can go in, drop off your kids for a couple hours, work out, and so it's not like. It's not a full day daycare, but you can have an activity every day, and they keep the kids busy. They're not, here's Blue's Clues or Bluey or whatever Blue is in favor this year on the TV, and they just sit them on a beanbag. They actually do stuff with them. So,
and you're seeing prices aren't. You haven't seen any price deterioration since you've been a member. It's been pretty steady.
No, but the one that opened up where I am is. In the first year is now the 4th or 3rd most profitable one they have. So it's very they do tons of they do. Where they make a lot of money is on all these not just the restaurant but personal training. So they'll do hourlies at about $125 an hour, and they just in certain areas do really well with them. But they adjust pricing, so they can meter things. When you get to know them, you find out they'll just lower it 10% and clear off a wait list, or they'll start calling their wait list if they have wait lists. They they actually use AI to help figure out how to keep the gym not as crowded as it might otherwise be, because everyone likes to work out around the same times. So they'll put the most popular classes a little bit off those times, so you get the waves of people. So it's that's
Well
so again,
managed.
I really
Seems well
I
managed.
like it. A little,
Yeah.
it's a little expensive, so being under 30, I'm fine with. I'm okay with
Okay.
that. Um,
And more
Hims and
important, you
Hers,
still like the stock. So
yeah, I want to see it grow into this valuation. It might do $2 next year, and $2 at 30, growing at 14% top line. That's not bad. I mean, I like that. That's if they can keep this
yeah.
growth going.
Yep. All right,
Hims and Hers
let's talk about what everybody wants to hear about.
Well, Hims and Hers reported, and I will tell you, if
Exactly.
they have a 35% short position going into the quarter. And I said I would never be short a stock like this. Today, they reported a not so great quarter. This is the first time in their history to report an EPS consensus miss, or a revenue, a top line consensus miss. And for a growth stock, that's not really what you want. It was down 12% pre-market after having had a huge run this last month. And right now it's just about even. It's down 14 cents. If I were short a ton of stock and I was playing,
that would scare me. Yep.
Yeah, you're playing a catalyst, the catalyst comes, your portfolio manager, if you're the analyst, or if you're at a pod shop, your risk manager is coming to you at the end of today, if this stock is down 10 cents as it is now, and saying to you, hey, when are we going to get paid on this? You have a lot of capital out. You've been wrong. Now the catalyst has come. Oh, well, but I think people need to understand the numbers. They'll start those excuses. But if you're down and you were given a little bit of rope for the quarter, oh, the quarter is going to make it. And last night you were excited. It's down 12% pre-market. That means it's going to be down 25% today. And then today turns around. Yeah, you're in trouble. You're in trouble. So I don't think that I am sure.
Those shoulder taps are happening as we speak.
Yeah, and you just see things like there. I mean, I'll go through the numbers here, but the revenue is up 73%, so that's amazing, right? Any company that's growing, and it on a base of 545, so it's not some micro cap that's it's 73% on $10 million. Subscribers were up 31%, even though they did have the loss of some subscribers for the GLP-1s. Free cash flow was negative, so it was positive last quarter. They're right at that point where they're getting to be positive, and then they drop down this time. They have some new launches coming that they announced, to testosterone replacement, labs, HRT. But if you look at the valuation, it's 37 times enterprise value to EBITDA. It's 5.5 times price to sales. The price per subscriber right now, if I did the math right, is around $5,000. So I'm mostly out. I thought this was good. This is a good position to have for something that you think is a multi-year, for me, is a multi-year winner for changing healthcare. But I'm not going to be oblivious to the valuation either. So I still want to get it under 40. I don't know if I'll ever see that.
The revenue miss is a big red flag for a growth company like this, right, Jeff? I mean, that kind of valuation, you can't miss on revenue.
No, you can't miss on you shouldn't miss on any of this. But again, it's the short base is so huge there. And to David's point, man, what's your catalyst? So it's kind of one of those that sometimes you just got to sit back and kind of watch stuff and enjoy it for the theater of it. And this seems to be one of those battlegrounds. If you haven't been involved in it, if you're not sitting on huge gains, it's late to join the party on kind of either side. But they're a disintermediator at the end of the day, and there's going to be a place, whether it's GLP, whether it's the erectile drugs, whether it's the whatever they're selling. With the way the healthcare situation is setting up in America, this is becoming kind of an alternative way to get medical care for stuff that you don't necessarily want to spend $500 in 6 months getting into your doctor to see. And there's going to be a place. It'll always be controversial, but there's going to be a place for companies like this, and that's been really what's, I think, been driving them. And so there's going to, it'll be choppy, but 73% is still pretty damn good. It's
Yeah.
maybe not what they wanted, but it's better than a poke in the eye with a big sharp stick. And so you're gonna have a hard time kind of getting a lot of traction on in either direction. It seems to me, just long or short.
Yeah,
Gives you a
Capital
little edge.
Capital filed on them last week, and you know it's the kind of thing where people are looking at it as, oh, this is transforming medicine, but it's going to take a long time. Like I mentioned earlier before the show that I might have a little bit of poison ivy. You know, to get a course of steroids or something like that, it would be great to, hey, I can call a telemedicine place, I can call HIMS, get that done. People aren't doing that. They're doing it as like, I'm going to buy a product. I want GLP-1s. I'm going to call them for that. I want an erectile dysfunction drug. I know this is going to be the clip now, so I shouldn't have said that. But so I call HIMS. I call HIMS.
You said it.
And yeah, no, I take that back. So so it looks like they're a very disciplined compounder. I wrote down 2 words from the call last night, that it was sobering and responsible. They had hired a whole bunch of really high tech people from different companies, and they talked about investment a lot. So the thing that gets me most nervous is on the conference call, they talked about a lot of investments going forward. We're going to invest in this. We're going to invest in that. We're going to build out this, all of which I think is great. They are doing the right thing if I were running the company that I'd want someone to do. But you know, anyone who's built a house knows it's expensive, and things become more expensive that you don't know. And so they have a lot to build. So I own a position that I'd call a disciplined compounder position, which is, you know what, I'm there, I'm taking an eye on it, but it's 10% of what it was a while ago. So
Okay. And you're a buyer under 40, it sounds like.
yeah, I'll play
Maybe.
horseshoes. If it's 52, I won't complain. But under 40 is really what I think that I need.
Okay.
One last
right.
by the way, Jeff, you'd be proud. I made some money on ThreadUp, not knowing anything. So
Attaboy.
that's in your area.
What is a ThreadUp?
What is it?
Yeah, I've never heard of it.
Oh, it's I'm still getting that echo. So it's people send in their clothes and they resell them to people online. So and they do a lot of.
So it's a real for clothes.
Exactly, but it's a lot of it's some of it's used, a lot of it's with tags on. So apparently I thought our family was alone, but a lot of people buy clothes and don't wear them, and then they sell them back with the tags on it. And they said that because of Temu and others having a little bit of a disruption, that may have helped them this quarter. But it was I felt lucky. But on another non-related healthcare name, CompoSecure reports this week. I mentioned it's kind of like it's like a mini Berkshire Hathaway in the making. The former chairman of Honeywell took a controlling position in it. They're going to build out and acquire other things. The current business makes metal credit cards, not the sexiest business in the world, not the highest growing, but they've had some stumbles this quarter. It could be a back to growth quarter. So I own a position there, CMPO. Non-healthcare.
You've mentioned this before. Is it still stumbling?
Well, no, I mentioned it a couple weeks ago, and so this is going to be the first quarter since mentioning it. We'll see if they can put up. They need to put up a decent quarter. My recent call with management, I said, "This isn't the greatest business." They go, "Well, no, we're converting people. The high end part of the market. If you go to get a high end credit card, it's going to be metal because it conveys a lot of importance and the rest." I said, "Yeah, but the last 20 times I bought something, it was with my phone. It wasn't with a credit card. So are you making metal phones?" They didn't like the joke. So we'll see. I mean, it's a show me kind of thing, but they also have
I got a credit card for my kids, and they're my 14-year-old, and he's like, "What? Why do I need this, Dad? I got a phone. I don't need to walk around with a card. What is this thing?" Which is kind of nice because it's the first time any of my kids have ever not wanted a credit card.
Yeah, and I think we're also in this post something, I don't know what you'd call a postmodern world, where having a fancy credit card, throwing down whether it's a black card or an Amazon card, no one views it any differently. No one's like, oh my God, black card, you must be a player, versus, oh, no, I get points on my Amazon card.
Yeah, I don't. The black card thing, I never understood the intrigue. And what does that cost? 10 grand a year or something like that? I mean, it's pretty steep.
Yeah, for what? But
for what exactly? All right, you guys want to wrap it? Let's do it. All right, thanks for joining us, everybody. We will see you tomorrow. Follow us on wallstreetbeats.com and wallstreetbeats/passes. Actually, no, passes.com/wallstreetbeats.
It rolls off the tongue.
It does. All right, we'll see everybody tomorrow. Thanks, Jeff. Thanks, David.
Thanks, Steve. Thanks, Jeff. See you.
You guys.